We're news for business people.
Good morning, you're watching DayBreak on Bloomberg Quint Live and I'm Alex Matthew. Let's look at the headlines first. There's no respite on the first day of the new month with Asian markets heading sharply lower. India grew at 7.2% in the third quarter, posting its fastest growth in 5 quarters. Fortis Healthcare reports a loss of little less than 46 crore in the third quarter, even as its auditor raises red flags in its review report. And a low base is expected to aid automakers when they come out with their monthly sales numbers today. Let's turn to the international markets. US equity markets have suffered their worst monthly decline since January 2016. In Wednesday's session, investors seemed still to be digesting Tuesday's testimony by Federal Reserve Chairman Jerome Powell. The S&P 500 and Dow both ended lower by over 1%, while the Nasdaq declined about 0.8%. Here's Bloomberg's Abigail Doolittle with a report on all the equity action from Wall Street.
It was a volatile day for stocks in Wednesday's Wall Street session, with the major averages finishing sharply lower for a second down day in a row after trading modestly higher for some of the session. The Dow fell to most of the major averages, down about 1.5%, while the S&P 500 was down more than 1%. In fact, on a two-day basis, the S&P 500 is down about 2.4%, its worst two-day streak since early February during the big sell-off for stocks. Now, this tells us bearish volatility is returning to the markets, and while there's not a clear trigger on the day, it's worth noting the Haven yen finished higher, while the euro yen was down about 1% at the lows. That's a fancy way of saying the smart early money appears to be seeking a haven play, leaving stocks in the dust, at least over the last 2 days. Now, relative to Wednesday, there was broad-based selling. 9 of the 11 sectors were lower. Energy down the most, weighed on by oil, down more than 2% on a bearish inventories report. As for some of the standout movers, Booking.com, the former Priceline, climbed by about 7% on a strong quarter. This helped Expedia climb as well, but to the downside, Celgene, the biotech giant, which fell about 9% on negative news from the FDA. And finally, relative to the month of February, it was the worst month for the Nasdaq since October of 2016, and the worst month for both the Dow and the S&P 500 since January of 2016. This as volatility returns to the financial markets in 2018. From New York, Abigail Doolittle, Bloomberg News.
Well, turning to the Asian markets, and those have opened as we had expected them to, with sharp cuts. The Nikkei is currently lower by over 1%. Bloomberg's Rosalind Chin joins us live from the Hong Kong studio with more on those markets. Rosalind, morning.
Good morning. Well, yes, the Asian equities here really extending their losses, most of them for at least a second day. We put the MSCI Asia Pacific right now trading lower by more than 1%. There are, of course, a little bit of nervousness, I guess you could say, around what Jerome Powell will be saying in his testimony in front of the Senate Banking Committee later on Thursday, after, of course, his comments on Tuesday, which did sort of indicate a slightly more hawkish stance. So, of course, investors keep a little bit concerned about what might also come out of that and what the Fed policy might be going forwards. So as you can see, all the markets in Asia, pretty much the main ones in the red. The Hang Seng just coming online right now, down by more than 1%. The Shanghai Composite down by 0.6% at this point in time. We have had a little bit of data out, though, that does at least offer, well, the numbers were generally better than expected, so offering a little bit of hope about sort of at least stronger economic fundamentals in some ways. We've got from Japan capital spending. Capital investment numbers were better than expected, rising 4.3% year on year versus an estimated 3% gain. So we see some signs there of economic resilience, perhaps, in that companies are more willing to spend, even though, of course, we know that wage growth hasn't been really growing very much. And in fact, Haruhiko Kuroda, the BOJ governor, has been speaking in front of Parliament just a few moments ago, and he also said that wages and inflation have been somewhat weak. He also said that BOJ easing has contributed to Japan's growth, and it's very important to raise Japan's potential growth rate. He has been making several appearances in front of the Diet of late. The Over in South Korea, we know that that market is closed for Independence Day, public holiday, but we did get some numbers out from them on exports, and those export numbers were up 4% year on year. So that beat estimates as well, because estimates were for a gain of only 0.5%. So again, two lots of small indicators perhaps of some resilience there in the markets in Asia. Crossing over to Australia now, the S&P ASX 200, I'll get that right in a moment, is losing 0.9%. Again, following the US decline on Wall Street overnight. But of course, we are seeing that US futures are pointing higher, so perhaps there is a little bit of hope that the markets may turn around by the end of the session. Back to you.
Thanks so much for that, Rosalind. Let's turn to the Indian markets now, and Darshan Mehta and Agam Vakila here, as usual, to set you up for the day's trade and also to tell you what's happening in the futures and options space. Morning, guys. Darshan, it's not looking good. The SGX has sharp cuts indicated for the Indian market.
Yeah, you're right, Alex. An 80-point downtick for the SGX Nifty. Global markets are overall weak. The Japanese markets are down 1.5%. So again, you know, going below the 10,500 mark in trade. Yesterday, pretty much seemed like a dead cat bounce. Apart from it, if you're looking at how the ADRs panned out in trade, look at the cuts that have come in. ICICI Vedanta down over 3%. HDFC Bank continues to bleed. Tata Motors continues to bleed. So overall, on the ADR side, also significant amount of weakness. Only IT was spared. That also Infosys and Wipro managed to do well. How did crude manage to pan out? Crude overnight was down over 2%. So there's significant amount of cuts that are coming in. Brent below the $65 barrel per mark. WTI coming in close to the $60 barrel per mark. So morning trade has been weak. Overnight cuts of over 2%. Even on the LME, most of the base metals ended with a negative bias. If you're looking at the metals that have come out, look at aluminium was down 0.7%. Copper and zinc were down over 1%. Lead was down over 2.5%. Overall, extreme weakness was seen. But not such weakness seen as far as China is concerned. Aluminium has managed to hold on. Steel is trading with a slight positive bias, but copper and zinc are seeing a little bit of selling that is coming in the Chinese markets. Overall, there is weakness even in the precious metals. Gold, silver and platinum, all of them seeing cuts in morning trade. How are FIs coping up with the daily trade matter? Again, they sold in another 1,700 crores in the cash market. DIs have bought in 1,600 crores. So just look at the difference in this month only. FIs have sold in almost 11,000 crores and DIs have bought in almost 18,000 crores in the cash market. So whatever FIs have been heavy sellers in this market. Now, in terms of which are the sectors that you need to watch out for, selling was not seen too much in mid caps and small caps yesterday. They managed to hold on in trade yesterday. But the big surprise was the Nifty PSU Bank Index, which after a big drop managed to end in the green. It was up almost 0.7%. The Nifty Bank stopped selling because of pressure on the private sector banks. The other sector that we want to watch is metals. After rallying significantly, metal is under pressure now. It was down over 1%. And finally, as far as the Nifty is concerned, the Nifty was down 60 points. Look at the contribution, basically financials, ICICI Bank, HDFC. HDFC Bank were the main contributors. L&T contributed on the negative side. Infosys and Reliance were the counters which managed to hold on to the Nifty. Otherwise, the cuts would have been much more. But Agam is here to tell us what happened with the F&O side.
Right, Darshan, so we did see the Nifty close around the 10,500 mark. So if you leave aside the fact that the Nifty closed in the negative yesterday, we are actually looking at consolidation. But as per the SGX Nifty indications, we could see a little more weakness coming in. That said, in terms of the futures, we saw very little change in open interest for the Nifty. When it comes to the Nifty Bank futures, again, that's where we saw that the index declined by as much as 1% with some amount of longs building in there. Moving in, when it comes to the India Volatility Index, that remained unchanged largely at around 13.8. And when it comes to the Nifty put call ratio, that fell in line with the Nifty at around 1.32 in comparison to 1.42. Moving in, we are also tracking some changes and a little more writing in the 10,700 call, and well, surprisingly 10,500 calls as well. So this may mean a little more pressure in today's day of trade. And in terms of stocks that we're watching out for, we have Apollo Tyres, which has seen fresh longs, and we've also seen fresh longs in something like a Bharat Forge. So those are some of the stocks that we're keeping an eye on the long side. And of course, Oriental Bank of Commerce saw a little bit of an uptick, which means we've seen your shorts being covered, considering so much weakness in the previous few sessions. That said, once again, all eyes will remain on the benchmark indices and what they do in today's day of trade.
All right, thanks so much for that, Agam. Let's take a check on the rupee and the bond market very quickly. Saloni Dhanuka is here with all the updates there. Morning, Saloni.
Good morning, Alex. So it was a very volatile session for Indian rupee and the bond market. Now the rupee weakened by a steep 30 paise to end at a fresh 3-month low of 65.17 levels against the dollar. Now the home currency extended losses for the third consecutive session following the hawkish comments from the new Fed Chair Powell on hiking interest rates for more than 3 times in this particular year. Now the rupee depreciated by close to 2.5% in last month, thereby marking its worst monthly decline since August 2015. Elsewhere on the economic data front, India's manufacturing sector activity fell to 4-month low in February to 52.1 levels due to slowdown in factory output, while on the flip side, India's GDP grew at 7.2% in December quarter versus 6.3% in the previous quarter, thereby making India's world's fastest growing economy. Moving on to bond market, sovereign bonds declined yesterday for the 7th straight month as yields on the new 10-year benchmark security rose 30 basis points last month to 7.73%. Now on the global front, dollar index hits a 5-week high yesterday and it trades higher for the third session in today's early Asian hours at 90.70 levels, largely supported by rising US Treasury yields. And lastly, coming back home, dollar rupee is trading at 65.21 levels against the dollar in the non-deliverable forward market, which indicates a flat to weak opening for Indian rupee in today's trade, Alex.
Thanks, Saloni. Now, the big update on the economy came last evening. The Indian economy gained momentum in the third quarter of FY18. Gross value added stood at 6.7%, in line with estimates, while GDP jumped more than expected to 7.2% growth in the third quarter. GVA, though, has become the preferred measure of growth as it excludes the impact of both indirect taxes and subsidies. India is now expected to grow faster than estimated in 2017-18, initially estimated, of course. GVA growth for the full year is seen at 6.4% compared to 6.1% forecast in the first advance estimates. GDP growth is expected to come in at 6.6% in the year ending March 2018. That's 10 basis points higher than the January estimates. Now, we connected with the former chief statistician, Pranav Sen, and here's what he had to say about the GDP growth.
One needs to be a little careful about the GDP number because there's an unexpectedly large increase in the net indirect tax collection. And I suspect that this is because of the initial GST glitch, where GST was being paid and the refunds were not flowing. The adjustments were not happening. So that, I suspect, is going to get corrected if the budget numbers are anything to go by. And so one should expect those to get moderated over time.
Now, we also connected with economists Aditi Nair of ICRA and Madan Sabnavis of CARE Ratings to figure out what they had to say about the GDP growth.
The GDP growth number has come in significantly higher than what we were expecting, which was 7%. At the same time, the GVA growth number is a tad bit lower than our estimate of 6.8%, and the wedge between the two has been really quite large in this quarter. That perhaps is something that won't sustain going into Q4, and that's something that we have to keep in mind. But overall, particularly on the GVA, which really reflects the trend in the real economy, there is certainly a good sequential uptake and a recovery which is underway.
It would still be a bit too early for one to rejoice and think that we are on an accelerated growth path. A lot will depend upon how demand conditions behave in Q4 and subsequently in fiscal 18-19. In fact, these kind of numbers, along with a GDP growth expectation of 6.6%, which the CSO has put out for the entire year, would actually mean that even the Q4 growth number should be similar to what we have seen in Q3, around 7.1%. So I think it's definitely a case of saying that we have gotten over the shocks, but we are not really onto the accelerated growth path because we are still talking of growth rate being lower than what it was in fiscal 16 and fiscal 17. We are still below 7% for the entire year, and something substantial will have to be done or has to take place in the next year in case we're going to cross the 7% mark and move towards, say, 7.5% to begin with.
So temperance is what they're calling for with regard to the numbers that have been released, but the Indian economy is on a good growth path, is what the word is from the DEA secretary, that's Subhash Garg. In a chat with Bloomberg Quint's Nikunj Ori, he went on to state that fiscal deficit, the all-important fiscal deficit, will be maintained at the projected 3.5%. Listen in.
GDP growth number 7.2 for the third quarter does indicate a very clear, robust turnaround of the economy. You would have also seen the numbers which are indicating the manufacturing growth of about 8.9% or something. Construction growth at about 7%. Right, all these indicate that everything in the economy is fixed, is doing well, and now we are on a very good growth path. It's also supplemented by the investment numbers represented by the gross fixed capital investment. So that also is indicating a very good turnaround for the economy, and which can be expected. We had the core sector growth number which have been released for January today, which indicates that fourth quarter would also be very good. It was at 6.7. This is one of the highest growth in the core sector. So everything seems to be now completely on track, and we can expect very good growth.
Okay, and so the fiscal deficit data was also released today. So and it came out to 114% of the fiscal deficit target that was previously set. So how do you think you'll be able to contain this, and you'll be able to achieve your revised fiscal deficit target?
It does happen in the month of January. If you would have seen even last year, our fiscal deficit was higher than 100%. So it does happen, and as more revenue starts coming in February and March, at that time we come closer to the to our fiscal deficit number. So I'm reasonably confident at this stage that we will be able to maintain our projected 3.5%.
Okay, my last question, sir. For cases like Nirav Modi's, you were coming out with a fugitive economic offenders bill. So when do we see that bill getting cleared and becoming a law, so that such cases, so that such offenders are stopped from setting up their bases overseas?
Whenever that bill is finalized and is considered by the cabinet, then it will become a law. At this moment, this is being drafted. Okay. And prepared.
And can we expect this in this budget session, sir? The second.
Let's see. That depends upon the cabinet to decide. So okay. we can't give any time frame for that.
Let's shift focus to the commodities market now, and Jayesh Khilnani joins in with all the details there. Morning, Jayesh.
Morning, Alex. Let me start off with oil prices. So both WTI and Brent actually slipped more than 2% after we got larger than expected inventory data from the US. So the crude oil inventory surged as much as 3.7 million barrels for last week and rose to the highest level in 2 months as per EIA data. Also, the gasoline supplies that actually climbed for a fourth straight month. So that was the negative for oil prices, and that's the reason we saw the 2% downtick for them. Moving on to the base metal space, that too ended lower on London Metal Exchange. The index itself closed more than 1% in the red. As far as individual base metals are concerned, copper slipped the most in about 3 weeks, backed by the Chinese factory data that we got, and the prices tumbled to about after funds cut their bullish bets to the 2016 low that we had. Also, lead was the worst performer. That dropped nearly 3%, and the inventory jumped to the highest level in since 2015. As far as gold prices are concerned, we saw that gold posted its biggest decline in over 5 months on account of the dollar index, which actually snapped its 3-month losing streak and posted a gain of about 1.7% for last month.
Thanks so much for that, Jayesh. Moving on, the CBI has arrested an internal chief auditor of a Punjab National Bank, that's M.K. Sharma, in connection with the 12,700 crore fraud that came to light mid-February. Meanwhile, the Enforcement Directorate is seemingly nearing the end of its search and seizure operations in that case. Shalini Souza has this report.
The Central Bureau of Investigation has arrested M.K. Sharma, the Chief Internal Auditor of Punjab National Bank, in the Nirav Modi fraud case. He was allegedly responsible for auditing the systems and practices of Punjab National Bank, Brady House branch, and report the deficiencies to the Zonal Audit Office. The exact reason for his arrest still remains unknown. Meanwhile, sources in the Enforcement Directorate said that they have almost completed searches and seizures in the Nirav Modi and Mehul Choksi case in India, and the total amount of the assets seized is close to rupees 6,200 crores. Independent valuation of assets still continues and is taking longer than normal, said an ED source. Nirav Modi and Mehul Choksi have not responded to 3 summons by the investigating agency. Now, they have approached the PMLA court to issue a non-bailable warrant against Nirav Modi. PMLA court is to decide on issues relating to Nirav Modi's non-bailable warrant case on March 3.
Now, Aircel has filed for bankruptcy protection from creditors, and the unit of Maxis Communications is likely to submit a request to the NCLT soon. This would be the first time a major company has initiated bankruptcy proceedings. Upmanyu Trivedi of Bloomberg News tells us the implications of this move.
Embattled telecom service provider Aircel has filed an insolvency petition in the National Company Law Tribunal, and the case is likely to come up for hearing in the coming weeks, our sources tell us. Aircel is the 6th largest telecom service provider in India and has 85 million subscribers, and it is one of the biggest cases where the company has volunteered for initiation of insolvency proceedings against earlier cases where it was lenders who dragged these companies to the newly formed bankruptcy court. Aircel, which is backed by Malaysian billionaire T. Anandakrishnan, is the latest casualty in India's campaign against delinquent borrowers.
Now, automakers will come out with their monthly sales numbers today, and none of them are expected to slow down in February. An average of the estimates put out by 3 brokerage houses peg it in double digits, while two-wheeler manufacturers are leading the way, much like what our own dealers' survey had predicted. Yatin Mota is here to give a breakup of the numbers.
Well, it seems that in the month of February, the momentum for the auto sales will continue, especially in the two-wheeler segment, where we are expecting strong double-digit growth. And starting with Maruti in the passenger vehicle segment, we are expecting a 16-17% kind of a growth. And February 2018 monthly estimate is of close to 1.52 lakh units. Coming to Mahindra & Mahindra Group, the automotive and the tractor segment, automotive segment is expected to show a growth of nearly 12.5%, whereas the momentum in the tractor segment will continue on the back of strong rural recovery. So we are expecting a 23% growth there. As far as Tata Motors is concerned, remember the new launches are doing well, and not only that, the commercial vehicle segment is also expected to do well. So we are expecting a strong 32% growth there on the back of good growth and a lower base. Coming to Ashok Leyland again in the commercial vehicle segment, we have estimated that probably it could grow almost 26%. Coming to the two-wheeler space, and as I was mentioning earlier, strong growth in the rural markets, low base, higher share of scooter sales would boost the overall earnings. So expect Royal Enfield sales to grow nearly 26%. Hero MotoCorp also should show good growth of nearly 13%. As far as Bajaj Auto and TVS Motor go, we are expecting a 20-25% kind of a growth there. So TVS Motor, almost 2.65 lakh units is what we are expecting for the month of February on the back of good scooter and motorcycle sales. And Bajaj Auto, remember, they have launched a new Discover. Probably we should see some kind of a positive incremental domestic sales, and not only that, three-wheeler market is picking up, export market is picking up. So overall number for Bajaj Auto should look healthy. So on an overall basis, if you look at the passenger vehicle segment, the commercial vehicle segment should grow in mid-teens, and probably the two-wheeler players should grow in excess of 20% for the month of February.
Well, clearly auto stocks are what you have to look out for today, but what are the other stocks in news? Well, Shraddha Babla is here to tell you all about those. Morning, Shraddha.
Good morning, Alex. Starting off with Balaji Industries, Jai Balaji Industries. They have reported their third quarter numbers. So while revenues have seen a strong growth, 56%, the company has reported a net loss of 68 crores versus a loss of 53 crores in a year ago quarter. That's because the operational loss, the EBITDA loss, has widened from 21 crores to 37 crores. You could see some negative reaction there. That apart, Reliance Power has approved raising of up to 2,000 crores via QIP, and they've said that they will be utilizing these funds to reduce debt at the company and its subsidiaries. You have MOIL, which has increased price of products with effect from 1st of March. So the prices of ferrograde and chemical grade have been increased by about 10%, while the prices of fines have been increased by 5%. You have SH Kelkar, which has shared some updates with respect to their fragrances business, where they're saying that the industry is seeing extreme volatility as far as raw material prices are concerned, and they're hoping that they'll be be able to pass on those higher costs to customers as well. NR Agarwal Industries, they are going to consider setting up a new 500 TD kraft paper unit. You also have Dynamatic Technologies, where the board has approved a plan for demerger of the auto division. And finally, also keep an eye out for BSE, because they're going to be meeting a couple of investors and funds, including Fidelity Institutional Asset Management and Jupiter Investment Management, etc., between 1st and 2nd of March.
Thanks for that, Shraddha. Now, S. Narain of ICICI Prudential AMC believes that the February month that we had with regard to the equities is just the beginning of a 2-year period when volatility continues to rise in the Indian markets. Speaking to Neeraj Shah on the Mutual Fund Show, Narain said that if the benchmark indices see a 10% correction, mid-caps and small caps could see an even bigger fall, considering the run-up that was seen. And here's a small slice of that conversation.
Broadly, we are believers that over the next 2 years, volatility rises, simply because you have a more advanced economic cycle. You have a large political calendar. So when you have a global withdrawal of quantitative easing, you have global markets not being particularly cheap. Many of them are reasonably high valuations. So I think for a combination of reasons, I would say that volatility we expect will increase over the next 2 years. And February could be a start of what we could see over a 2-year period.
How high are the chances of a meaningful drawdown?
See, what we've been telling people is this is not 2008. So the chance of a 50% fall in Nifty look very, very low. On the other hand, can the markets correct from here? The markets can correct from here. Can the markets be in a phase where they don't give you big returns? That is also possible. So I believe that the chance of a large cap index falling more than 20-25% look very, very low. On the other hand, could the markets correct from where we are today? It could correct. And that's one of the reasons we do recommend categories like balanced advantage and debt at this point of time.
Sure.
And we have not been recommending small caps. And my PMS division has actually last month shut a small cap scheme because they felt that small caps was expensive and consequently returned money because on a risk return trade-off, small caps were not looking attractive. So I think that's where we are. So I would say we are not bearish, but I would say we are not super bullish either at this point of time, because the near term does carry volatility. So appropriate product strategies is what we've been recommending to investors.
What happens to mid caps and small caps, smaller mid caps and small caps, Narain, over the 12 months and in the event of a meaningful drawdown? I'm not talking about a 20%, but let's say there's a 10% drawdown, which to a lot of people is meaningful as well. What happens to the broader end?
I think they fall more. And I think clearly they've had such a fantastic run from 2013 September that I think the chance of a bigger drawdown in small and mid caps is very much there. Unlike large caps, where large caps, there have been so many stocks which have gone nowhere in the last 3 to 5 years, whereas in mid caps, almost all the stocks have gone up. So our view is that the risks in small and mid caps are much higher than the risk in large caps at this point of time.
Now, there's lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. But there are also several stories that you should consider reading on the website bloombergquint.com. First up, Fortis Healthcare, that reported a net loss of just under 46 crore rupees in the second quarter and 37 crore in the third, has been red flagged by auditor Deloitte Haskins & Sells. In the auditor review report, Deloitte said that it had not been able to obtain sufficient appropriate evidence to form a conclusion on the statement of the financial results of Fortis, and as a result were abstaining from the expressing a conclusion. This, they said, was due to the significance of the matters relating to the ongoing investigations, to loans given and recoverability of certain vendor advances. Moving on, President Donald Trump is warning that the US will use all available tools to prevent China's state-driven economic model from undermining global competition. The latest warning to Beijing as America readies a host of trade actions. That's all we have for you on this edition of Daybreak, but all you need to know is up next, so do stay tuned. This is Bloomberg Quint.